While the world is fixated on Warren Buffett's empty chair in Omaha, a much more aggressive power move is happening behind the closed doors of 270 Park Avenue. Jamie Dimon hasn't just hired a new executive, he has essentially poached the crown jewel of Berkshire Hathaway as investment team to launch what Wall Street is already calling the private oracle. Starting tomorrow, Todd Combs, the man who taught Buffett how to love tech, will be sitting on a $10 billion war chest at JPMorgan, tasked with a mission that goes far beyond simple stock picking. This isn't just a fund, it's a decade-long, $1.5 trillion security and resiliency initiative designed to buy up the backbone of the American economy. Today, we are breaking down the 5 specific stocks that are almost certainly at the top of Todd Combs' secret buy list. If you want to know where this hot and smartest money in the world is moving while everyone else is panicking about Buffett's retirement, you cannot afford to miss this. Before we dive into the first $1 trillion sector Combs is targeting, make sure you hit the subscribe button and turn on notifications. The era of the Omaha Oracle may be ending, but the era of the JPMorgan Strategic Investment Group is just beginning. And you want to be positioned before the big money arrives. The narrative surrounding Todd Combs' departure has been focused on what Berkshire is losing, but the real story is what JPMorgan is gaining. Jamie Dimon is building a fortress, and he's using the Security and Resiliency Initiative, SRI, as the blueprint. This initiative is focused on 4 critical pillars: defense, aerospace, healthcare, and energy. But there's a 5th category: frontier technology. That is the real wild card. Combs isn't looking for the next meme stock. He's looking for companies that are essential to national security, supply chain stability, and the structural resilience of the United States. He's looking for the new moats. The first stock on the list is a company that sits at the intersection of 2 of Combs' primary mandates: defense and frontier technology. When we look at the SRI's mission to bolster national economic security, there is one name that stands above the rest in 2026. This company has spent the last decade building an OS for the modern world, and now that it's deeply embedded in the Pentagon and the U.S. intelligence community, it has become an indispensable moat company. We're talking about Palantir Technologies. For a value-oriented investor like Combs, who transitioned into growth through Apple, Palantir represents the ultimate hybrid. It's a software company with the sticky, long-term contracts of a traditional defense contractor. In a world of increasing geopolitical friction, the ability to process massive amounts of data in real time is the ultimate security asset. At Berkshire, Buffett might have been hesitant about the complexity of Palantir's business model, but at JPMorgan, under the SRI mandate, this is a perfect Type A investment. It's a play on the resilience of the U.S. government and the modernization of its defense infrastructure. But the SRI isn't just about software. It's about physical reality. The second stock likely in Combs' sights is a titan of critical minerals and supply chain resilience. If you've been following the macro trends of late 2025, you know that the trade war has evolved into a resource war. JPMorgan has explicitly stated that the $10 billion fund will target the critical minerals sector. This points directly toward Freeport-McMoRan. As the world's leading producer of copper, Freeport isn't just a mining company. It is a bet on the electrification of the entire American grid and the production of advanced weaponry. You cannot have energy security or strategic manufacturing without copper. Combs, who spent years analyzing capital-intensive businesses at Berkshire, understands the replacement cost moat of a company like Freeport. In an era of domestic reshoring, owning the source of the raw materials is the ultimate hedge against global instability. This is old-school value investing met with new world strategic necessity. The third stock moves us into the aerospace and defense sector, specifically looking at the resiliency of the U.S. military-industrial complex. While many look at the traditional Big Five contractors, Todd Combs has a history of looking for the precision plays, companies that make the essential components that no one else can replicate. This leads us to Lockheed Martin. Now, you might think Lockheed is too obvious, but look at it through the lens of the SRI. Lockheed is the lead contractor for the F-35 program, but they are also pioneering hypersonic technology and satellite-based communication systems. These are the frontier technologies Jamie Dimon mentioned in the SRI press release. At Berkshire, Combs was part of the team that held massive stakes in American Express because it was a toll bridge for the financial system. Lockheed Martin is the toll bridge for global security. It is a cash flow machine that trades at a reasonable multiple compared to the frothy tech sector, making it a classic Combs pick for a $10 billion portfolio that needs to show both stability and strategic importance. The fourth stock is where the healthcare pillar of the SRI comes into play. JPMorgan hasn't just talked about medical technology, they've talked about healthcare resiliency. This isn't about finding the next biotech moonshot. It's about the infrastructure of the health system itself. Todd Combs, who was the CEO of Geico and worked on the Haven project with Buffett and Bezos, has a deep understanding of the inefficiencies in the American healthcare system. He knows that the real moat in healthcare isn't a single drug. It's the data and the distribution. This points toward United Health Group. United Health isn't just an insurance company. Through Optum, it is the largest employer of physicians in the United States and a massive data analytics firm. It's a company that owns the patient journey. In a post-2025 world where healthcare costs are a primary threat to economic stability, United Health is the resiliency play. It has the scale to drive efficiency in a way that no other company can. For Combs, this is a compounder stock with a defensive moat that fits perfectly into the JPMorgan portfolio. Finally, we have to look at the energy pillar. But Combs isn't looking at traditional oil and gas. He's looking at energy transition and grid resiliency. As we enter 2026, the demand for power, driven by the AI data center boom, is reaching a breaking point. This brings us to NextEra Energy. NextEra is the world's largest renewable energy company, but it's also a traditional utility. It combines the safety of a regulated utility with the growth potential of the clean energy revolution. For a $10 billion fund focused on resiliency, owning the infrastructure that powers the future is a no-brainer. This fits the Combs profile perfectly. It is a capital-heavy business that requires deep operational understanding. Much like the energy businesses he oversaw at Berkshire, but it has a high-tech growth tailwind that Greg Abel might be too conservative to fully exploit. Let ES peel back the layers on why this $10 billion fund is fundamentally different from anything else on Wall Street. Most funds are built to beat the S&P 500 by a few percentage points using technical analysis or momentum. But the JPMorgan Strategic Investment Group, SIG, under Todd Combs, is built on a fortress mandate. Jamie Dimon didn't just give Combs a check. He gave him a seat at a table surrounded by what I call the corporate Avengers. The SRI's advisory council includes Jeff Bezos, Michael Dell, former Secretary of State Condoleezza Rice, and former Defense Secretary Robert Gates. When you have the founder of Amazon and the architects of U.S. foreign policy whispering in your ear, you aren't looking at quarterly earnings. You're looking at the next 50 years of American hegemony. This is where our first stock, Palantir Technologies, comes into sharp focus. For years, the bears called Palantir a black box or a consulting firm masquerading as a software company. But look at it through the lens of resiliency. In late 2025, the U.S. government announced the Titan project, a massive overhaul of military AI and data processing. Palantir isn't just a participant, they are the bedrock. Todd Combs' history at Berkshire shows he values stickiness. Once a government or a massive corporation like JPMorgan integrates Palantir's Foundry or Gotham platforms, the cost of switching is virtually infinite. It is the ultimate high-tech moat. In his new role, Skinome, Combs isn't just buying Palantir stock, he's investing in the digital nervous system of the West. If the SRI's goal is national security, then owning the software that predicts supply chain failures and battlefield movements is not just an investment, it is a requirement. Then we have to address the physical world, which brings us to the deep dive on Freeport-McMoRan. Jamie Dimon has been vocal about the painful clarity of America's reliance on unreliable foreign sources for critical minerals. In the 2026 macro landscape, copper is the new oil. You cannot build a data center for the AI revolution, a battery for a domestic EV, or a missile for the Defense Department without massive amounts of copper. Freeport-McMoRan owns the Grasberg mine in Indonesia and massive operations in the Americas. They are the linchpin of the SRI's energy independence pillar. Combs knows that in a world of global fragmentation, a term JPMorgan uses constantly in their 2026 outlook, the companies that own the real assets will win. While most tech-focused investors are fighting over software multiples, the private oracle is looking at the ground. Freeport represents a deep value, play that Berkshire might have missed because of its sensitivity to commodity cycles. But for JPMorgan, which can hedge those cycles through its massive trading desk, Freeport is a strategic asset. It asks about resiliency through ownership of the raw materials that make the modern world function. If you're tracking where the $1.5 trillion is actually going to flow, follow the copper wires back to Freeport. This leads us into the advanced manufacturing mandate. The SRI isn't just about mining and software, it's about bringing the hard tech back to U.S. signal oil. This is where the second billion-dollar chunk of the fund is likely to go. We are seeing a move away from the just-in-time inventory model that defined the last 30 years toward a just-in-case model. This shift requires a level of automation and robotics that the U.S. has ignored for decades. Todd Combs, who sat on the board of JPMorgan and watched the bank OS own $15 billion annual tech spend, understands that the biggest bottleneck in 2026 isn't capital, it's labor and efficiency. By investing in companies that provide the robotic backbone for U.S. factories, COMEX is playing a multi-decade trend of reshoring. He's looking for the companies that make the machines that make the products. This is the inception of value investing. You don't just buy the shoe company. You buy the company that makes the automated loom that allows the shoe company to leave China and set up shop in Ohio. This is the strategic part of the strategic investment group. It's about creating a self-sustaining American industrial ecosystem, funded by the world's largest bank and steered by the man who was trained by the greatest capital allocator in history. The healthcare pillar is equally vital but often misunderstood. When JPMorgan talks about healthcare resiliency, they aren't talking about nursing homes. They're talking about the pharmaceutical precursors, the raw chemicals needed to make life-saving drugs. Right now, a terrifyingly high percentage of those chemicals come from overseas. The SRI has been tasked with fixing that. This is why a company like United Health Group is so critical to the portfolio. It's not just an insurer, it's a massive logistics and data engine that can provide the demand signal for a new domestic pharmaceutical supply chain. COMEX understands that resiliency in healthcare means the ability to keep the population healthy without relying on a global supply chain that could be severed in a weekend. This isn't your grandfather's value investing. This is geopolitical value investing. It's the realization that the most valuable companies of the next decade won't be the ones with the highest growth rates, but the ones that are too essential to fail. In the post-Buffett world, the Oracle isn't a person in Nebraska. It's a data-driven investment vehicle in New York that has the backing of the US government and the world's most powerful CEO. Now, let's go deeper into the energy independence pillar, because this is where the Security and Resiliency Initiative, SRI, meets the undeniable reality of the AI revolution. In late 2025, Jamie Dimon made a startling admission during a closed-door summit. The biggest threat to American AI dominance isn't a lack of chips, it's a lack of power. Data centers are cannibalizing the grid, and in the COMEX era at JPMorgan, energy is no longer a utility. It's a strategic defense asset. This brings us to a closer look at our fifth stock, NextEra Energy. While NextEra is the world's largest producer of wind and solar energy, its real value to the SRI lies in its partnership with the tech giants on the advisory council, like Michael Dell and Jeff Bezos. NextEra isn't just building solar farms. They are building the NextEra 360 software ecosystem, a digital layer that manages energy consumption and generation in real time. JPMorgan is already using this software across their own global real estate portfolio. COMEX sees NextEra as the Apple of energy. It's a company that owns both the hardware, the plants and the grid, and the software, the management systems. For a $10 billion fund focused on resiliency, NextEra provides the power moat that every other industry in the portfolio, from Palantir acting as data centers to Freeport power test mines, depends on. But the SRI isn't just about the Goliaths. To understand how Todd COMEX is truly going to operate, we have to look at the Davids, the smaller specialized companies that secure the supply chain for the giants. In October 2025, JPMorgan quietly revealed its first major investment under the SRI, a $75 million equity stake in Perpetua Resources. This is the smoking gun for COMEX' strategy. Perpetua is working to become the first domestic producer of antimony, a critical mineral used in everything from high-capacity batteries to the primers in every bullet the U.S. military fires. Right now, China and Russia control nearly 90% of the world's antimony supply. Think about the risk that poses to a security and resiliency mandate. By taking a direct stake in Perpetua, JPMorgan is essentially ensuring the U.S. military's ammo supply. This is a move right out of the Warren Buffett playbook, identifying a toll bridge asset that everyone needs but no one else can provide. But unlike Buffett, who might wait for Perpetua to become a multi-billion-dollar giant, COMEX is using the JPMorgan war chest to venture catalyze the domestic mining industry. He's not just buying a stock, he's building a national defense asset. This leads us to the frontier technology mandate, specifically the intersection of AI and cybersecurity. Jamie Dimon has repeatedly called AI transformative and as profound as the rise of computing. But at the 2026 World Economic Forum, he added a caveat. AI is also the most dangerous weapon ever created for cyber warfare. This is why Todd COMEX' role is so vital. He isn't just looking for AI growth, he's looking for AI defense. The JPMorgan Strategic Investment Group is likely eyeing CrowdStrike or a specialized quantum encryption firm. Why? Because in a world of agentic AI models, which are expected to reach human-level performance by mid-2026, the only way to protect the financial system is with a fortress level of cybersecurity. COMEX, with his experience at Geeko, knows that the cost of a single catastrophic failure can wipe out decades of gains. His investment strategy in the tech space won't be about features or UI. It will be about zero trust resilience. He wants the companies that make it impossible for state-sponsored actors to shut down the JPMorgan trading desk or the US power grid. Now, let's talk about the Advisory Council Alpha. Imagine you are Todd Combs. You have a $10 billion mandate. On your speed dial, you have Robert Gates, the former Secretary of Defense. You have Condoleezza Rice. When they tell you that the next geopolitical flashpoint is the South China Sea, you don't just read the news. You move the capital. This advisory council acts as a geopolitical filter. It allows the fund to identify risks 6 months before they hit the headlines. For instance, while retail investors are buying generic defense ETFs, the council is likely pointing combs toward autonomous systems. The 2026 defense budget has shifted heavily toward unmanned systems, drones for the air, sea, and land. This is why a company like Anduril Industries, if it goes public in 2026, or a specialized division within Lockheed Martin would be a primary target. The SRI is focused on munitions, missiles, and hypersonics. They aren't interested in legacy tank programs. They are interested in the high-tech, high-margin frontier weapons of the next decade. This creates a resiliency flywheel. JPMorgan finances the mining company, Freeport, which provides the materials to the aerospace company, Lockheed, which builds the drones powered by the energy company, NextEra, all protected by the software company, Palantir. And who is at the center of this web? Todd Combs. He is no longer just a stock picker. He is the architect of the industrial renaissance. If you're watching this and thinking, can I really compete with a $1.5 trillion initiative? The answer is no, you can't compete with them, but you can invest with them. By identifying the subsectors JPMorgan has tagged, all 27 of them, from nanomaterials to shipbuilding, you can find the micro-moats that will benefit from this massive wave of capital. The shocking truth about the JPMorgan fund is that it's not designed to play the market. It's designed to create the market. When JPMorgan puts $10 billion into these sectors, it sends a signal to every other bank, venture capital firm, and pension fund on the planet. It's a follow-the-leader game where Jamie Dimon is the leader and Todd Combs is the navigator. As we look at the transition from the Omaha way to the Berkshire Park Avenue way, the biggest difference is capital concentration. Buffett loved to hold forever. Combs, in this new role, will likely be more active, not trading the stocks, but building the companies. He's taking a private equity approach to the public markets. He will use JPMorgan's massive balance sheet to provide these companies with better terms, better data, and better connections than they could get anywhere else. This is the end of passive value. This is the beginning of strategic value. And for the 5 stocks we've discussed today, Palantir, Freeport-McMoRan, Lockheed Martin, United Health, and NextEra Energy, the arrival of Todd Combs and the 10 billion SIG fund is like pouring rocket fuel on a bonfire. Let us pull the curtain back on the 27 subsectors that JPMorgan has officially designated as the battlefield for 2026. While most retail investors are still trading the Magnificent Seven, Todd Combs is looking at a much more granular map. This list is a breakdown of the 27 specific industries that Jamie Dimon and Combs believe are underfunded and overcritical. Among these, the one that should have your absolute attention is shipbuilding and maritime resiliency. For decades, American shipbuilding has been in a state of decay, with over 90% of the world's commercial ships being built in Asia. But the SRI has flagged this as a Tier 1 national security risk. Todd Combs knows that in a conflict scenario, the ability to repair and build ships domestically is the difference between winning and losing. This points toward companies like Huntington Ingalls Industries. They are the largest military shipbuilder in the U.S., and while they are a large cap, they sit at the center of a massive web of middle market suppliers that the $10 billion JPMorgan fund is designed to catalyze. Combs is also looking at nanomaterials. This sounds like science fiction, but it's the reality of 2026. We are talking about the graphene revolution and advanced coatings that make aircraft invisible to radar, or batteries 10 times more efficient. This is the frontier tech pillar in action. JPMorgan isn't just looking at the companies making the materials, they're looking at the companies that own the patents. This is the intellectual moat that Combs loves. At Berkshire, he helped move Buffett toward Apple because of its ecosystem. In the SRI, he is looking for the atomic ecosystem, the companies that own the fundamental science that the rest of the world has to license. And then there is the nuclear energy subsector. In late 2025, the US government fast-tracked the deployment of small modular reactors, SMRs, to power the massive AI data centers we discussed earlier. This is where the SRI's energy independence and frontier tech pillars collide. Companies like NuScale Power, or even specialized divisions within General Electric, GE Vernova, are now on the Combs watch list. Unlike traditional nuclear plants that take 20 years to build, SMRs can be factory built and shipped to site. For an investor like COMEX, who understands the power of scalable manufacturing, this is a generational opportunity. He is looking for the Ford Model T of the energy sector. But what about the small cap and mid-market plays? This is where the direct equity part of the $10 billion fund gets really interesting. JPMorgan has explicitly stated they will target lesser-known, smaller companies. Why? Because that's where the succession gap is. There are thousands of brilliant American manufacturing firms with aging owners and no succession plan. COMEX, the man who spent 5 years running Geco, understands operational succession better than anyone. He's looking to buy stakes in these hidden champions. The company in Pennsylvania that makes the one specific valve for every nuclear sub, or the firm in Ohio that processes the rare earths for every F-35. We've already seen the first moves. MP Materials, which owns the only scaled rare earth mine and processing facility in North America, is a prime example of an SRI resiliency play. But the next wave will be even deeper. Think about Lithium Americas. As the U.S. tries to build a domestic battery supply chain to rival China's, the Thacker Pass project in Nevada becomes a strategic asset. When JPMorgan takes a stake in a company like this, they aren't just looking for stock appreciation, they are providing the sealed and seal of approval that allows the company to get billions more in government loans and private contracts. It's the JPMorgan effect. This is the fundamental shift in Todd COMEX's career. At Berkshire, he was an observer. He looked at the world as it was and tried to find the best deals. At JPMorgan, he is a participant. He is using the $1.5 trillion in Corrigan facilitated capital to reshape the world to fit his investment thesis. He is essentially playing a game of SimCity with the American economy, and he has a $10 billion cheat code to make it happen. If you're a retail investor, this is your unfair advantage. For the first time, a $1 trillion initiative is being led by a man whose investment philosophy is publicly documented. We know how Todd COMEX thinks. We know he looks for high ROICs, return on invested capital. We know he looks for sticky customer bases. We know he looks for technological moats. Now, we just have to apply that lens to the 27 subsectors JPMorgan has handed us on a silver platter. The shocking truth here isn't that COMEX left Buffett. The shocking truth is that he is taking the Omaha blueprint and applying it to the public-private partnership model. He is creating a national interest fund that is entirely commercial. This means he can move faster than the government and bigger than any venture capital firm. He's targeting the industrial renaissance of America. Think about the pharmaceutical precursor subsector. Right now, if you need a common antibiotic, there is an 80% chance the raw chemicals came from a factory in a country that might not be a friendly ally tomorrow. The SRI has flagged this as a resiliency disaster. COMEX is likely looking at companies like AMI Resources or the specialized fine chemical divisions of companies like Eastman Chemical. These are the companies that will be the recipients of the next $5 billion in SRI-facilitated loans. This is the COMEX Alpha. It has the ability to see the connection between a chemical factory in Tennessee and the national security of the United States. It has the ability to see that 6G and secure communications, another of the 27 subsectors, is not just about faster TikTok videos. It's about the command and control of the future battlefield. When you look at the portfolio this way, you realize that the top 5 stocks we discussed are just the tip of the iceberg. The real money is in the structural change that these companies represent. To understand the true power of this $10 billion fund, we have to look at what's happening in the pocket shadow boardroom of the SRI Advisory Council. While Todd COMEX is the pilot, the navigation is being provided by individuals who have spent their lives at the highest levels of global power. Think about the presence of Robert Gates and Condoleezza Rice. These aren't just names on a letterhead. They are the architects of the global fragmentation hedge. In their internal white papers, JPMorgan has started using a specific phrase, the era of the gated globe. They believe the 30-year experiment of open, borderless trade is over. In its place, we are seeing the rise of economic fortresses. This geopolitical reality is the filter through which every stock pick must pass. If a company relies on a complex, vulnerable international supply chain, it's a sell. If a company provides the walls, the gates, or the self-sufficiency for the American fortress, it's a buy. This leads us to a sector that most people ignore until it fails: cyber-physical infrastructure. COMEX is looking at the companies that protect the basics, water, electricity, and telecommunications, from both physical and digital sabotage. He's likely eyeing firms like Schneider Electric or specialized domestic units of Honeywell. Why? Because they provide the industrial control systems that keep the lights on. In the SRI's view, a resilient nation is one where the grid cannot be hacked or held hostage. This brings us to the Bezos factor. Having Jeff Bezos on the advisory council isn't about Amazon, it's about the logistics of the future. Bezos revolutionized how we move consumer goods, but the SRI is focused on how we move strategic goods. We are seeing a massive push into heavy-lift autonomous logistics. Imagine a fleet of autonomous, electric-powered cargo planes and ships that can move critical minerals from a mine in Nevada to a factory in Ohio without a single human in the loop. This is the logistics moat. COMEX is targeting companies that are building this private infrastructure. That's looking at the intersection of aerospace and automation, specifically companies like Rocket Lab for space-based logistics or specialized maritime tech firms that are automating our ports. But the global fragmentation hedge also means betting on agricultural resiliency. As climate volatility and geopolitical tensions threaten global food supplies, JPMorgan has flagged smart agriculture as a critical subsector. But they aren't buying farms. They are buying the technology of sovereignty. They are looking for the companies that provide vertical farming solutions, drought-resistant seeds, and precision irrigation. This is where a company like Deere & Co. becomes a security play. Under the SRI lens, Deere isn't a tractor company. It's a food security platform that uses AI and satellite data to ensure maximum yield in a fragmented world. COMEX understands that a nation that can't feed itself can't be resilient. The psychology behind this is what I call fortress investing. It's a departure from the growth at all costs mindset of the 2010s. Instead of looking for the next app that goes viral, COMEX is looking for the bedrock of society. He is looking for businesses with a negative churn, where the customer, often the government or a major utility, literally cannot leave because there is no other option. This is the ultimate evolution of the Buffett moat. While Buffett looked for brands like See's candies that people loved, COMEX is looking for infrastructure that people need to survive. This strategy is particularly effective in a high inflation or high interest rate environment, which many economists predict will persist through 2026. These essential companies have massive pricing power. If the price of a copper valve doubles, the nuclear submarine builder still has to buy it. If the price of cybersecurity software goes up 20%, JPMorgan still has to pay it. By concentrating $10 billion into these inelastic sectors, COMEX is building a portfolio that is essentially immune to the traditional market cycles. It is a zero-beta strategy for a world of maximum risk. And we can't ignore the institutional momentum this creates. When JPMorgan identifies a resiliency leader in one of the 27 subsectors, it doesn't just buy the stock. It provides the company with access to the bank's entire ecosystem. They get better credit lines, better insurance through the bank's partners, and direct introductions to the CEOs on the advisory council. It's a kingmaker strategy. If Todd COMEX decides that a specific mid-cap aerospace firm is the future of domestic drone production, that firm suddenly has the most powerful bank in the world as its patron saint. This is the hidden alpha that retail investors can't see on a Yahoo Finance chart. It's the political and financial capital that follows the investment. This is why, when we look at our top 5 and the broader 27 subsectors, we aren't just looking at tickers, we're looking at the new power map of the American economy. The SRI is essentially a bridge between Wall Street and the real economy of factories, mines, and power plants. As we move toward the final 1,000 words of this analysis, we need to ask, what is the end game for Todd COMEX and Jamie Dimon? Is this just a $10 billion fund, or is it the pilot program for a $1 trillion shift in how the world's largest bank allocates capital? The evidence suggests it's the latter. They are building a private Federal Reserve for the industrial world, a source of capital that is more stable than the public markets and more strategic than the government. The shocking truth is that while the media is mourning the end of the Oracle in Omaha, they are missing the birth of something much more powerful in New York. The Strategic Investment Group is the 21st century version of JPMorgan's original role in the late 1800s, the man who literally financed the industrialization of America. This leads us to the final, and perhaps most strategically significant, stock on Todd COMEX's list, the one that represents the ultimate test of the security and resiliency mandate. While the world has been chasing the high-flying multiples of NVIDIA, the JPMorgan Strategic Investment Group is looking at the foundation of the Silicon world. We are talking about Intel. In 2026, the shocking truth is that semiconductors are no longer just tech components. They are the oil of the 21st century. Jamie Dimon has been incredibly clear. America cannot be resilient if it does not own the means of production for its own chips. Intel, as the only US-based company with the scale to manufacture at the leading edge, is the primary beneficiary of this national security shift. JPMorgan has already participated in massive financing rounds for Intel's domestic fabs in Ohio and Arizona. For COMEX, Intel represents a classic deep value turnaround. It's a company that has the infrastructure, the patents, and now the full weight of the US government and JPMorgan's capital behind it. If the SRI is about strategic manufacturing, Then Intel is the crown jewel of that entire pillar. But as we wrap up this deep dive, we have to look at the grand synthesis. What Todd Combs is building at JPMorgan isn't just a portfolio, it's a sovereign investment vehicle. By moving away from the Omaha way and toward the Park Avenue way, he is signaling the end of the era of the passive long-term investor. The new oracle is active, it is geopolitical, it is institutional. The 27 subsectors we've discussed, from antimony mining to quantum encryption, are the building blocks of a new American economy. While the S&P 500 may struggle with the Buffett retirement and the volatility of 2026, these resiliency stocks are being held in place by a $1.5 trillion structural floor. You're witnessing the birth of the Fortress portfolio. The shocking truth is that the $300 billion portfolio Buffett left behind in Omaha was a monument to the past 60 years of American growth. The $10 billion fund Todd Combs is launching tomorrow is the blueprint for the next 60 years. It's a portfolio designed not just to survive a global crisis, but to profit from the restructuring that follows it. If you're still holding 100% of your money in the traditional 60-40 portfolio, you're betting on a world that no longer exists. You're betting on the gated globe staying open. You're betting on supply chains remaining peaceful. You're betting on business as usual. But Jamie Dimon and Todd Combs aren't betting on that. They are betting on resilience. So here's your final action plan. Step 1. Review your exposure to the essential 5 we've discussed: Palantir, Freeport McMoran, Lockheed Martin, United Health, and Intel. Step 2. Look at the 27 subsectors. Are you invested in the atomic ecosystem of nanomaterials or the infrastructure moat of nuclear energy? Step 3. Watch the Combs effect. Every time a JPMorgan announces a new direct equity stake in a mid-cap manufacturing firm, pay attention. That is the new Buffett buy signal. The era of Warren Buffett was about value. The era of Todd Combs is about vitality. It's about the companies that are vital to the survival of the nation. If you want to stay updated on every single move that JPMorgan Strategic Investment Group makes in the first quarter of 2026, you need to be part of this community. We will be tracking the $10 billion deployment dollar by dollar. Hit that subscribe button, give this video a like if you're ready to build your own Fortress portfolio, and tell me in the comments, which of these 5 stocks do you think is the most too essential to fail in 2026? Thank you for being here for this deep dive into the most important financial shift of our generation. The oracle may have retired, but the game is just getting started. Stay resilient, stay informed, and I'll see you in the next one.